Hey folks, Dan Frio here with your market update for September 12th, 2024. So mortgage rates dropped considerably yesterday on the 30-year fixed. Is that going to continue today? Well, let's look at the economic news coming in today, and there was two huge pieces of information. This revolves right around what the Federal Reserve monitors: jobs and inflation. So let's get over to it. We had the producer inflation numbers coming in. They came in 0.2, in line with expectations. There's a lot of things that came in line with expectations today in these reports. I'm a little suspicious. I'm not a conspiracy theorist, but I'll show you, and then you'll probably point these out as I go through the numbers. But let's get over to Rick Santelli. He's over at CNBC. He's going to give us the breaking numbers on the PPI numbers right now, and then we're going to dig into those a little bit more deeper, and then the jobs numbers, how those are actually in line with a lot of expectations. So I think good news is a lot of this is focusing in on a completely soft landing. So let's get over to see what the PPI is, and then we'll continue the report. Take it away, Rick.
Can we just, I just got to press pause for half a second because we have some economic data coming through, and then I want to continue this conversation on the...
Okay, so if you didn't watch last night's video, I'll put it right up here. Okay, Rick Santelli and this host over here, they got into it last night. And the biggest thing was Rick Santelli came out and he's like, guys, this political campaign stuff has got to end, because all these guys do is promise you, and then nothing comes to fruition. Okay, nothing comes to fruition. And then what they're actually, these aren't policies, they're promises to get your vote. Okay, so you got to check out that video. I'll put it right up through there. But I was surprised they're speaking this morning. But without further ado, let's take it away and get the today's PPI report.
The other side. I just want to get over to Rick Santelli, who's got those August producer price numbers.
Yes, well, let's start out with jobless claims. 230,000, that's up from 228,000. Remember, we did have a holiday. It could affect continuing claims, which once again are over 1.8 million, 1,850,000. We look at final demand headline up 0.2 on PPI, a tenth hotter than we were thinking. If you look at core, it's up 0.3, much hotter. If you look at X, food, energy, and trade, up 0.3. 1.7 on year over year, that is progress. 2.4 year over year on core, that remains exactly the same as it's been. And if you remove energy, food, and trade, 3.3, which it's been averaging. All these, of course, on the year over year are rather steady. We're going to go back to our interview, but we will come back and dig deeper into these PPI numbers.
So at the closing bell, I'll come in and I'll give you Rick's video for the day on where that goes. He takes a little bit of a deeper dive into that, but let's do that right now, just for simplistic reasons. Okay, so here's some of the numbers, and I'll go through these, and tell me if something just seems odd to you, and I'll point it out here in a second. You might get a little hint here of what I'm talking about with some of these numbers, just saying. Okay, so jobless claims. The last reading was 227,000. It was expected, or it was revised to 228. They then forecasted it was going to come in at 230,000. What did it come in at? Holy moly, 230,000 on the button, what they forecasted. Doesn't happen that often. Well, let's go to continued claims. Last reading was 1.838. So it was 1.83 million. Okay, it was revised to 1.84 million, so revised up, just like the other one. What was the forecast? 1.85 million. What did it come in at? Exactly 1.85 million is the forecast. I've never seen these numbers come in exactly as is. So just saying. All right, so the core producer price index he went over, last reading was 0. It was actually updated to negative 0.2. So it came in at 0.3, a little bit hotter than expected, but is this going to get revised? Probably. Producer prices right through here. And so you get the gist of it. But here's the thing that really jerks my chain. Here's the federal budget. Okay, you're going to see a negative in front of these numbers. All right, because they're spending too more than they're bringing in is revenue. Okay, so the last reading was 2.44 billion. What is it now? 380 billion. Are they actually cutting, or are they increasing to this? The deficit is completely out of control, folks. So as you get older, you'll get it. Okay, so that's what we see right through there. So let's get to the main headlines through here. It's basically the same thing, especially on the top of this, the federal budget is way out of whack. So that's what we're seeing right through there. Let's go over to the jobless numbers, or jobless claims. Jobless claims edged up to 230, but still no signs of a rising layoffs. There's no signs of basically massive layoffs. That's fantastic news when it comes to the economy. That's that part of it. Let's over through here. What it would be a bigger, let's say the Federal Reserve came in and actually cut rates 50 basis points. After all the data that we've seen this week, especially on inflation and jobs, the numbers are coming down. They're coming down gradually, and everything's kind of fallen into place, believe it or not. So why would they cut 50 basis points? Let's keep those rates up there a little longer to keep that inflation cooling, but you have to really pay attention to those jobs numbers. But with the jobs numbers today, basically they're just flat. So the Federal Reserve, what they're going to do is they're going to cut 25 basis points. If they do 50, the markets are going to say, okay, they know something that we don't know, and the markets are going to knee jerk. I can guarantee that's what would happen. Okay, so that's what you're seeing there. So I've been trying to each week to come up with ideas for you guys to invest, where to put your money while you're waiting to buy that house. Okay, or you might have that house and you're like, Dan, I continue to watch you because I want to get educated on finances and economics and so forth. So I'm going to give you probably the number one place I would park my money. Now, I'm not a financial advisor. I don't want you to trade on what I do. I want you to use this for educational purposes only. But there's a tool. Remember, I was teaching you guys the other day. If you saw some of my videos, I kind of sneak some tips in there for you guys where to invest or where to at least look to invest to put your money. So I always have my kids once they're basically born and they start getting birthday money and stuff like that, I have them put money into two sections. One, the S&P 500, and one, Berkshire Hathaway. Okay, so I just want to show you, this is also where the have and have-nots get. And if you guys are getting sick of that verbiage, then I need you to change your mindset, okay? So every paycheck, I want you to get a little bit of your money and put it somewhere. Put it to work for you. Okay, so this is the S&P 500. I want to show you the returns that it's getting. And again, this is why people invest. This is why some people have more money than others. Here's the returns on the S&P 500 over the last, let's just go down through it. So you go through here, here's the price return, and then you also get dividends, which is like you have in your interest on your bank account. You put money in the bank, you might get an interest rate of 2, 3, 4%. They pay interest. Well, these stocks pay interest too, so it goes back into your account. So in 2024, so far, it's only September, the S&P 500 is up almost 18%. 18%. Okay, in 2023, it was up 26%. Yes, it took a hiccup in 2022. This is where you can say, okay, the market, it crashed right through here, so I'm never going to invest again. Nobody should ever invest again. Think of housing. When housing took a dump, now everybody's saying, oh, you never want to buy again. Prices are too high. Well, people were saying prices are too high for the stock market too for the last year or two, and you're missing out on these returns. So if you said, okay, it hiccuped here, you're out, you're not going to invest any money, you just missed out on basically a 40% return. You can see down through here, more often than not, you're getting a good turn. But then you're going to say, here, again, let's use this as hypotheticals. 2008, you can see this. This is when the housing market crashed too. But you're going to say, well, stocks were up at that time, so the stock market has to crash now too because it crashed in 2008. Okay, so, but what happened the year after? Up 26, 15, 2, 16, 32. So it's like housing. If you're like, okay, the housing market crashed, I'm never going to buy a house. You'd be stupid to buy one. Well, then you see the prices go up, up, and up. Yeah, it's not a straight line. You're going to have some hiccups, but overall, you're going to do well. You're going to do well. Okay, so that's my investment advice for today. So my name is Dan Frio. What do I do? Am I an investor? Am I a financial planner? No, I'm just a mortgage loan officer trying to win your business. That's it. If you're out there, you're anywhere in the whole country, I can help you. I'm licensed in all 50 states as well as Puerto Rico. So if you're looking to buy that first house, maybe buy that first investment property, refinance, how do you pull the equity out of your current home to buy the next house? These are all questions that we can answer for you. How do you find out? How do you reach out to us to get these questions answered? Go to the rateupdate.com. Here's our website. If you're looking to buy that first house, you need to hit the grant finder. It's fantastic. We're helping hundreds of people get thousands and thousands and thousands of dollars of down payment assistance, and it's right through here. Just click the national grant or this. But otherwise, if you check that out and you're like, oh, I didn't qualify, and you still want to keep moving forward, well, just click the Apply Now button. Or what you can do is call us. You can scroll down to the bottom of the website and you can give us a call, 844-775-5626, or you can email me directly, and it'll be me, at dan@therateupdate.com. So thanks so much for watching, guys. God bless. Have a fantastic afternoon. I'll be back here at the closing bell to let you know how all this mess settled for the day. So thanks a lot. See you later. Bye-bye.